Listen, I need to show you something that's happening in the silver market right now that most people over 60 are completely missing. And I'm not talking about some theoretical opportunity that might play out over the next decade. I'm talking about a situation that's unfolding as we speak. And if you're sitting on retirement savings wondering how you're going to make it through what's coming, you need to understand what I'm about to share with you. Here's what nobody's telling you. While everyone's been focused on gold hitting new all-time highs, silver has been quietly setting up for something we haven't seen since 1980. And I know what you're thinking, because I hear it all the time. I've heard this before. Silver's always about to explode. It never happens. And you know what? You're right to be skeptical. But what's different this time isn't hype. It's math. It's physics. It's the cold, hard reality of supply and demand meeting head-on in a way that cannot be ignored. Let me paint you a picture of what's actually happening right now. The global silver market moves about 1 billion ounces per year. That's total mine production, recycling, everything. Sounds like a lot, right? But here's where it gets interesting. Industrial demand alone is consuming 600 million ounces annually. Solar panels, electronics, electric vehicles, 5G infrastructure, medical applications. Silver isn't just a precious metal anymore. It's a critical industrial commodity that modern technology cannot function without. There is no substitute for silver in most of these applications. None. Now, investment demand. That's another 200 million ounces. Jewelry and silverware. That's 180 million ounces. You add that up, and we're already at 980 million ounces of annual demand against 1 billion ounces of supply. We're talking about a market that's balanced on a knife's edge. But here's the part that should make your hair stand on end. That industrial demand number? It's growing at 15% per year. The solar industry alone is projected to need 85% more silver by 2027 than it does today. The electric vehicle revolution that everyone's talking about? Each EV uses about 1 kilogram of silver. That's 32 ounces per vehicle. And we're supposed to be producing 30 million EVs per year by 2030. Do the math with me for a second. 30 million vehicles times 32 ounces. That's 960 million ounces just for EVs, in a market that only produces 1 billion ounces total. And that's before we talk about solar panels, before we talk about 5G, before we talk about anything else. The numbers don't work. They can't work. Something has to give. But it gets worse. And by worse, I mean better if you understand what's coming. Global mine production of silver peaked in 2016 at about 900 million ounces. Since then, it's been declining. We're now producing about 830 million ounces from mines annually. The rest comes from recycling. But here's the problem with recycling silver. Most of it is used in such small quantities in electronics that it's not economically viable to recover. When your phone dies, that silver is gone. When those solar panels reach end of life in 25 years, recovering the silver costs more than the silver is worth at current prices. So we have declining mine production, exploding industrial demand, and limited recycling. The deficit has to come from somewhere, and it's been coming from above-ground stockpiles. But those stockpiles are running dry. The Silver Institute estimates that identifiable above-ground silver inventories have fallen by 80% since 1990. We've been eating our seed corn for 3 decades, and we're almost out. Let me tell you about what happened in March 2020. You remember that, right? When the world shut down and markets went haywire. Silver dropped to $12 an ounce. But here's what most people don't know. The physical market completely disconnected from the paper market. You couldn't buy physical silver at $12. Dealers were charging $20, $22, $25 for silver eagles when the spot price said $12. Why? Because there wasn't any physical silver available. The mints couldn't keep up. Refineries were shut down. The supply chain broke. And that was just a taste. That was a temporary disruption. What I'm describing to you now isn't temporary. This is structural. This is permanent. The world needs more silver than exists. And when that reality finally hits the market, when the paper price and the physical price diverge permanently, people who waited are going to be priced out completely. Now, I know some of you are sitting there thinking, but I'm 60, 65, 70 years old. I don't have time for this. I need safety. I need income. I can't afford to speculate. And I want to be crystal clear with you. I'm not talking about speculation. I'm talking about preservation. I'm talking about insurance. Because here's what else is happening that you need to understand. The dollar is being systematically destroyed. I don't mean that as hyperbole. I mean it as observable fact. Since 2020, the money supply has increased by 40%. 40%. In 3 years. That money didn't create 40% more goods and services. It created inflation. And the official inflation numbers, the ones the government publishes, those are a joke. They tell you inflation is 3%. But you go to the grocery store, you know better. You fill up your gas tank, you know better. Your insurance premiums, your property taxes, your healthcare costs, you know better. Real inflation, the inflation you actually experience in your daily life, is running somewhere between 8 and 12% annually, and it's not going away. It can't go away. Because the government is running trillion-dollar deficits every single year. They're spending money they don't have. And the only way they can keep doing that is by printing more money, which means more inflation, which means your savings, your fixed income, your retirement nest egg, it's losing purchasing power every single day. Let me give you a concrete example. Let's say you have $500,000 in retirement savings. Sounds like a lot, right? Should be enough to live on. But at 10% real inflation, which is conservative based on what we're actually seeing, that $500,000 loses $50,000 of purchasing power in the first year. In year 2, it loses another $45,000. By year 5, your $500,000 only buys what $295,000 would have bought when you started. You didn't spend a dime, and you lost 40% of your purchasing power. Now, what if you had taken 20% of that, $100,000, and put it into physical silver when it was $24 an ounce? That's about 4,200 ounces. And what if silver does what it did in the last major bull market, when it went from $8 to $50? That's a 6x move. Your $100,000 becomes $600,000. But more importantly, your purchasing power is preserved. Because silver, like gold, maintains its value against currency debasement. It always has. It always will. I want to tell you about someone I know. His name is Robert. He's 68 years old, retired engineer. Smart guy, worked his whole life, saved diligently, did everything right. Had about $800,000 in his 401k, mostly in bonds and dividend stocks like everyone told him to do at his age. Safe and conservative, right? This was back in 2019. He came to me asking about silver, and I told him what I'm telling you now. He didn't do anything. Too risky, he said. Too volatile. He needed safety. Fast forward to today. His $800,000 is now worth about $850,000 on paper. Looks like a gain, right? But in real purchasing power, accounting for actual inflation, he's lost about 35% of his wealth. His dividend income, which was supposed to support his retirement, doesn't cover half of what it used to because everything costs so much more. He's having to draw down principal just to maintain his lifestyle, and he's terrified because he can see the math. At this rate, he's going to run out of money in his lifetime. Meanwhile, the people who bought silver in 2019 at $16 an ounce, even at today's price around $31, they've doubled their money. But more than that, they've preserved their purchasing power. They can still buy the same amount of goods and services they could 5 years ago. That's the difference between understanding what's happening and hoping everything will be okay. Quick aside here, because this is important. If you're sitting on $100,000 or more in retirement accounts, traditional IRAs, 401ks, that kind of thing, you should know that you can move some of that into physical precious metals without taking a taxable distribution. It's called a gold IRA, but it can hold silver too. I put together a free guide that explains exactly how this works, how to do it without penalties, what the rules are. It's in the description below. Worth looking at if you want to protect some of your retirement savings from what's coming. No pressure, just information. Anyway, back to what's happening in the silver market right now. Because there's another piece of this puzzle that's absolutely critical, and it has to do with the paper market versus the physical market. See, most of the silver that trades every day isn't real silver. It's paper contracts. Futures contracts, options, ETFs, all kinds of derivatives. And the amount of paper silver that trades dwarfs the amount of physical silver that actually exists. The COMEX, That's the commodities exchange where silver futures trade. They have something called open interest. That's the total number of contracts outstanding. Each contract represents 5,000 ounces of silver. Right now, open interest is around 140,000 contracts. That's 700 million ounces of silver. But here's the thing. The COMEX only has about 300 million ounces of silver in its registered vaults. That's the silver that's actually available for delivery. So there are more than twice as many claims on silver as there is silver to deliver. Now, most of those contracts never go to delivery. They're just traded back and forth, settled in cash. But what happens if people start demanding physical delivery? What happens when industrial users who actually need the silver start taking delivery instead of rolling their contracts forward? What happens when investors lose faith in paper promises and demand the real thing? We got a preview of this in 2021 during the Reddit silver squeeze. A bunch of retail investors on Wall Street bets decided to try to squeeze the silver market by buying physical silver and SLV shares. The price spiked from $25 to $30 in a matter of days. But more importantly, physical premiums exploded. Silver eagles that normally sold for $2 over spot were going for $10, $12, $15 over spot. Why? Because there wasn't enough physical silver to meet demand. The mints couldn't keep up. Dealers were sold out. And that was just retail investors with relatively small amounts of money. Imagine what happens when institutional money figures this out. When pension funds and sovereign wealth funds and family offices start allocating even 1% of their portfolios to physical silver. We're talking about trillions of dollars of potential demand hitting a market that only produces $25 billion worth of silver per year. The math doesn't work. The price has to go exponentially higher to ration the available supply. Let me give you some historical context, because this isn't the first time we've seen this movie. In 1979 and 1980, the Hunt brothers tried to corner the silver market. They accumulated over 100 million ounces of physical silver. The price went from $6 an ounce to $50 an ounce in a matter of months. Now, they eventually got crushed because they were using leverage and the exchange changed the rules on them. But here's what's important. That was two guys with a few $1 billion moving the market. Today, there are thousands of billionaires. There are pension funds with trillions under management. There are sovereign wealth funds with unlimited resources. And the silver market is actually smaller today in real terms than it was in 1980. If you adjust for inflation, that $50 silver in 1980 would be about $185 in today's dollars. And the market fundamentals today are far more bullish than they were then. Back then, silver was primarily a monetary metal and an industrial metal. Today, it's a critical technology metal that's essential for the green energy transition and the digital economy. The demand drivers are much stronger. The supply situation is much tighter, and the amount of money in the world is exponentially larger. Here's another thing most people don't understand. Silver is primarily a byproduct of other mining operations. About 70% of silver comes from mines that are primarily producing copper, lead, zinc, or gold. Silver is just a byproduct, which means that silver supply is relatively inelastic. Even if the price of silver doubles or triples, you're not going to see a massive increase in supply because miners aren't mining for silver. They're mining for other metals, and silver just comes along for the ride. This is completely different from gold, where higher prices incentivize more exploration and production. With silver, the supply response to higher prices is muted, which means that when demand exceeds supply, the only way to balance the market is through price. And the price has to go high enough to destroy demand. High enough that industrial users start looking for substitutes, even though there aren't good substitutes. High enough that jewelry demand collapses. High enough that investment demand gets priced out. But here's the paradox. The higher the price goes, the more investors want to buy because they see the momentum. It becomes a self-reinforcing cycle. We saw this in 2011 when silver went from $18 to $49 in less than a year. It wasn't because of fundamentals. It was because of momentum and fear of missing out. And we're setting up for the exact same thing now, except the fundamental backdrop is much stronger. Let me talk about what's happening in China, because this is crucial and most people have no idea. China is the world's largest producer of silver, mining about 110 million ounces per year. But China is also the world's largest consumer of silver, using about 200 million ounces per year. They're a net importer of 90 million ounces annually. And that import number is growing as their solar and EV industries explode. But here's what's really interesting. China has been stockpiling silver. The Chinese government doesn't publish official numbers, but based on import data and production data, analysts estimate that China has accumulated somewhere between 1 and 2 billion ounces of silver over the past 2 decades. Why would they do that? Because they understand what's coming. They understand that silver is strategic. They understand that whoever controls the silver supply controls the green energy transition. And it's not just China. India imports about 150 million ounces of silver per year, primarily for jewelry and investment. The Indian people have a cultural affinity for precious metals that goes back thousands of years. They don't trust paper currency. They don't trust banks. They trust gold and silver. And when inflation starts to bite, when the rupee starts to lose value, they buy more silver. It's a hedge. It's insurance. It's savings. So you have the 2 most populous countries in the world, representing almost 3 billion people, with growing middle classes and increasing wealth. And they're buying silver. Not paper silver, physical silver. Silver that gets taken off the market and put into private hands where it's not coming back out unless the price goes exponentially higher. Now let's talk about what's happening in the United States, because this is where it gets really interesting for people like you who are over 60 and worried about retirement. The U.S. Mint sells silver eagles, which are 1-ounce silver coins. They're legal tender, they're backed by the U.S. government, and they're the most popular silver investment product in America. In 2023, the Mint sold 24.5 million silver eagles. In 2024, they sold over 30 million. Demand is accelerating, but here's the problem. The Mint can't keep up. They've had to ration sales to dealers. They've had to suspend sales multiple times. Why? Because they can't get enough silver blanks. The blanks are made by a company called Sunshine Minting, and they're running at full capacity. They can't produce anymore. So even though demand is surging, supply is constrained. And when supply is constrained and demand is surging, what happens to price? It goes up. It has to. And we're already seeing this in premiums. The premium is the amount over spot price that you pay for physical silver. Normally, silver eagles trade at about $3 to $4 over spot. Right now, they're trading at $6 to $8 over spot. That's a 100% increase in premiums. Why? Because there's not enough supply to meet demand. And this is at current prices. Imagine what happens when silver breaks $35, then $40, then $50. The premiums are going to explode because everyone's going to want physical, and there won't be any available. This is why I'm telling you, if you're over 60 and you're worried about your retirement, you need to act now. Not next month. Not when silver hits $40 and you're convinced. Now. Because by the time everyone else figures this out, you won't be able to get physical silver at any reasonable price. The premiums will be so high that it won't make sense. You'll have missed the opportunity. Let me address something I know some of you are thinking. But what if I'm wrong? What if silver doesn't go up? What if I buy now and the price drops? Fair question. Let's think about the downside. Silver is currently around $31 an ounce. What's the worst case scenario? It drops to $25? To $20? Okay, so you lose 20% to 35% in the short term. That's the downside. Now let's think about the upside. If silver just goes back to its inflation-adjusted 1980 high, that's $185 an ounce. That's a 6x return from current prices. If it goes to where the gold-to-silver ratio says it should be, which is around 15 to 1 based on historical norms and current gold prices, that's $180 an ounce. If it goes to where supply and demand fundamentals suggest it needs to go to ration demand, that could be $200, $300, who knows. So you're risking 20% to 35% on the downside to potentially make 500% to 1,000% on the upside. That's an asymmetric bet. That's the kind of risk-reward that makes sense, especially when you're trying to preserve purchasing power in an inflationary environment. And here's the thing about silver that's different from stocks or bonds or real estate. It's nobody's liability. When you own physical silver, you own an asset that doesn't depend on anyone else's promise. A stock is a claim on a company's future earnings. A bond is a promise to pay you back. A dollar is a promise by the government. But silver is just silver. It has intrinsic value. It's been money for 5,000 years. It's not going to zero. It can't go to zero. Think about what that means in the context of what's happening in the world right now. We have the highest debt levels in history. We have central banks printing money like there's no tomorrow. We have geopolitical tensions escalating. We have a banking system that's increasingly fragile. We have a dollar that's losing its status as the world's reserve currency. In that environment, what do you want to own? Paper promises or real assets? I'll tell you what the smart money is doing. They're buying physical, precious metals. Not paper ETFs, not mining stocks. Physical metal that they can hold in their hands or store in a secure vault. Because they understand that when the system breaks, and it will break because the math doesn't work, the only things that will have value are real assets. Food, energy, land, and precious metals. Silver is unique because it's both a monetary metal and an industrial metal. It has dual demand. Even if the monetary system doesn't collapse, even if we muddle through somehow, the industrial demand for silver is going to drive prices higher. The green energy transition alone guarantees that. We cannot build solar panels without silver. We cannot build electric vehicles without silver. We cannot build 5G infrastructure without silver. The demand is non-negotiable. And here's something else to consider. The silver market is tiny. The entire above-ground supply of silver, all the silver that's ever been mined and still exists in some form, is worth maybe $1.5 trillion at current prices. That's less than the market cap of Apple. It's less than 1% of global financial assets. Which means it wouldn't take much money flowing into silver to move the price dramatically. If just 1% of global financial assets, which is about $400 trillion, decided to allocate to silver, that would be $4 trillion trying to buy into a $1.5 trillion market. The price would have to go up by a factor of 10 or more just to accommodate that demand. And we're already seeing the early signs of this. Institutional investors are starting to wake up to silver. Hedge funds are accumulating positions. Sovereign wealth funds are diversifying into precious metals. You're at an inflection point right now. You're at a moment where you can still get physical silver at reasonable prices with reasonable premiums. But that window is closing. Every day, more people figure this out. Every day, more silver gets consumed by industry and taken off the market permanently. Every day, the supply-demand imbalance gets worse. I want you to think about your situation honestly. If you're over 60, you probably have most of your wealth in traditional retirement accounts. Stocks, bonds, maybe some cash. And you're probably worried. You're worried about inflation. You're worried about market crashes. You're worried about running out of money. You're worried about leaving something for your kids or grandkids. Those are legitimate concerns. And the traditional financial advice you've been given, the 60-40 portfolio, the safe withdrawal rate, all of that was designed for a different world. A world where inflation was low and stable. A world where bonds provided real returns. A world where the dollar was sound. That world doesn't exist anymore. The rules have changed. And if you keep playing by the old rules, you're going to lose. Not because you did anything wrong, but because the game changed, and nobody told you. Silver is your hedge against that. It's your insurance policy. It's your way of preserving the purchasing power of your life savings in an environment where everything else is being systematically devalued. And the beautiful thing about silver is that you don't need to get the timing perfect. You don't need to buy at the absolute bottom. Because the long-term trajectory is clear. The supply-demand fundamentals are undeniable. The monetary backdrop is supportive. The industrial demand is accelerating. All you need to do is own some. Not all your money, not even most of your money, but some meaningful allocation. 10%, 20%, whatever makes sense for your situation. Enough that if silver does what the fundamentals suggest it's going to do, it makes a real difference in your financial security. Enough that you can sleep at night knowing that part of your wealth is protected from currency debasement and financial system risk. The time to act is now. Not because I'm trying to create urgency artificially, but because the market is telling you it's time. The premiums are rising. The supply is tightening. The demand is accelerating. The fundamentals are aligning. Everything is pointing in the same direction. You've worked your whole life to build your nest egg. You've saved, you've sacrificed, You've done everything right. Don't let it all get inflated away because you were too cautious to protect it. Don't let fear of making a mistake prevent you from taking action, because the biggest mistake you can make right now is doing nothing. Silver could be your lifeline. It could be the difference between a comfortable retirement and a stressful one. It could be the difference between leaving a legacy and leaving nothing. The opportunity is here. The question is whether you're going to seize it.